Welcome to IDGM. My name is Miriam Kiwan, and I am joined today by Sam Engelbart and Richard Kim from Galaxy Interactive. Both Richard and Sam are general partners at Galaxy Interactive, and we're going to focus today on culture, community, and how Web3 and the Metaverse are transforming different industries. Sam, Richard, thank you so much. It's been great spending some time with you earlier today, and I'm very much looking forward to the conversation. It's such an exciting topic and very broad as well. But I want you both have a very interesting background, given your sort of journey prior to Galaxy. Could you please share with the audience a little bit more about your background? How did your journey lead you to Galaxy? And I would take it from there.
Sure, and actually, if anybody in the back, do we want to bring more people up here?
Yeah, please, come on.
I don't even know that we need the mics if people want to come up and sit a little closer, but I'm happy to use it.
Maybe we should do that so they can come closer.
Yeah? All right, so we'll do the backgrounds first. Actually, one thing that Richard and I both have in common at the start of our careers is law. So we're both... as we say, recovering lawyers. After the point that we were trained as lawyers, we went in quite different directions for the bulk of our career until starting to work together about 4 years ago. Richard will give you his background. Mine has been entirely in content and media businesses, both as an operator and founder and as an investor. The first half of my career, I always tell people in old media, and really all of the businesses that have been in secular decline now for the past few decades. I was probably, if it was a melting ice cube type of media business, I was probably involved in it in the first 10 years or so, and actually had a great time building all kinds of companies in that space, in film and television production and financing, in the record industry, and with most of this is with one partner, sort of my first real long-term mentor and partner, a guy named Michael Lambert. We rolled up about 25 record labels and created one of the largest independent jazz and instrumental music labels. I was in the movie theater industry twice, once with a startup that we built 7 very high-end dinner and a movie theater concept. It was a business called Gold Class Cinemas, which we sold to another company called iPic. And then shortly after that, right after the 2008 crisis, which we can talk about, it's relevant when we get to the later part of the discussion, we ended up buying a couple of chains of movie theaters and putting them together and built a circuit called Rave Cinemas. I was in 2009, and by 2010, the business was built, and it was very much a pretty traditionally structured private equity deal. And if you were doing old media stuff from 2000 to 2010, and I was pretty young then, it was impossible not to pay attention to what was happening in digital media and emerging media technology. YouTube had launched, and streaming was becoming a thing. Netflix was evolving from a business that was shipping you CD-ROMs in red envelopes to streaming movies and acquiring rights to distribute movies via the internet. All of this stuff was happening, and video games were starting to emerge. The iPhone had launched, and it was becoming clear that the culture carrier for the generations younger than me was going to be video games. And so I was able to convince my partner, Michael, to let me take a small amount of money from the balance sheet of our holdco and start investing in earlier stage venture technology companies and video game studios. So I invested in my first video game studio in 2010, a company called Seismic Games, which actually subsequently was bought by Niantic in 2016. And the founder of that business founded the first game studio that we invested in together through Galaxy. So video games in 2010, VR and AR shortly after that, and really I was just trying to drink from the fire hose in terms of what is happening in media and tech and all of the new ways that people are engaging with this immersive digital content and platforms. That led me to Bitcoin, actually, and crypto. I always say that if you were introduced to Bitcoin in 2011 or 12, which is when I started buying it, you were either...
That's quite early.
It was early. And you were either really made aware, like in my case, I met the Bitcoin and crypto community through the video game industry because there was a whole group of the early Bitcoin advocates that had been in the digital object space for a long time in the video game industry first. And so way before Bitcoin became a thing, people involved in video games were actively buying and selling digital objects and building marketplaces and other businesses through which to engage with these digital objects and to build the economies inside of games. And so you really, if you were doing Bitcoin in 2012, it was either through that group of people or probably the cyber hacker community. And so in my case, it was the game community, which is, I think, why it's always made sense that video games were going to be such an important part of the story of consumer adoption that we're going to talk about today with Web3 too. So that was really the story. And that got into crypto and socially met Mike Novogratz, and then he and I had a lot in common then in terms of being early to crypto, but also really interested in other venture type investments. And he was doing some stuff in film and some things in VR and AR, and ultimately he convinced me to move from LA to New York, and we started his family office together with a few other partners, and that family office became Galaxy Digital.
And you raised the first part of the fund, I believe around $300 million first before Richard joined?
Yeah. Well, so Galaxy Digital is this merchant bank that Mike and I and a couple other partners started that was really created to institutionalize Web3. We had raised, even prior to starting Galaxy Digital, we had raised this $325 million fund that was going to be a sort of general blockchain-focused venture capital fund. And then when we started Galaxy Digital and took that business public, Richard joined us as our founding COO. And again, we'll get to his background now. It'll all make sense. But we were spending a ton of time in the early months when he had moved over from London to New York. And we just really bonded around this thesis for what became a division of Galaxy Digital called Galaxy Interactive, which is now, we're a traditionally structured VC franchise focused on interactive content and tech and investing our third fund. So our first fund was $325 million. That was the general fund that we repurposed to focus entirely on interactive content and tech. We raised a second fund, which was a $325 million fund, and now we're investing our third fund.
Amazing, fascinating. Richard.
Yeah, I'll give a pretty quick background on myself. So I started my career in the heart of the financial crisis in '07, thrown initially as a lawyer working on derivatives and financial regulation in the immediate aftermath of the financial crisis. So I went from being a derivatives and regulatory lawyer to joining the markets business at JP Morgan in 2012, the FX business. Over the next 6 years, I became the COO of FX and emerging markets trading at Goldman and JP for 6 years. And in conjunction with that role, in 2017, I started looking at the crypto space, from a professional standpoint. I had dabbled in it, 2014, 2015. But what was really interesting to me was, Bitcoin was another FX pair settled differently. And when you really look at the nitty-gritty of the foreign exchange market and how incredibly inefficient it is to do something as simple as settle an FX trade, this technology of I can send you a Bitcoin and it can settle without anyone intermediating that transaction except the self-interest of miners, it was really fascinating to me. And it kind of led me down a rabbit hole where I led Goldman's initiative to essentially look into crypto from 2017, involving a trading desk, custody business. We looked at stable coins, and that's how I met Mike in 2017. And that's what led me to joining Galaxy in 2018. After a few months working on the management and strategy side of things, I realized Sam and I, shared this passion for, how does this technology get used in the retail context to really enable the individual with the power of markets, but also tapping into all of the consumer passions that we see pretty clearly today in the Web3 space, and investing in that space from an early stage venture standpoint. So that's what we'll get into today.
Great, thank you both. So for those who are not familiar with Galaxy, both interactive and digital, can you give them a little bit of an overview of what you do and maybe touch on your thesis, given sort of the huge variety of areas that you invest in?
Yeah, sure. Yeah, so as I was saying before, Richard and I run a business, a division of Galaxy Digital called Galaxy Interactive. We're a traditionally structured VC fund, franchise, sector-focused fund, investing only in companies in what we call it the interactive content and technology sector. For us, that's really the intersection of content, which has been predominantly video games over the last 4 years. We've been the most active video game studio investor in the world. We believe that there's all sorts of things in the content bucket beyond games that are going to become relevant in this sort of immersive digital world that's being created. But today and primarily over the last bunch of years, it's been video games first. That is the way that people are, especially the generations younger than us, are really first experiencing and interacting with these immersive digital worlds. So the intersection of content and social commerce and finance and infrastructure technology, it's sort of the idea is what's interesting and investable if you believe, like we do, that people are spending and are going to continue to spend an increasing amount of their conscious time immersed in digital worlds. I think the way we used to talk about it with in the old media world is kind of the ideas of second and even third screens now. So if you think about the fact that people are watching television while they have their laptop open, they've got their phone, like you're really talking about people on 2 or 3 screens at a time and arguably spending more than 100% of their conscious time already engaging with these digital platforms and immersive digital worlds through their hardware devices. So the big idea for us is really that there's this migration happening to this increasingly digital species even, and it's where people are entertaining themselves for sure, but increasingly where they're building their social identities, where they're building their friendships, where they are educating themselves, where they're going to be earning their living. And then the technology is also making possible this opportunity to merge your digital and physical lives. So even when you're out in the world and away from a platform or a digital place that you might inhabit through your computer, you're out in the physical world, but you're always connected and you're increasingly interacting with digital objects and again, staying connected to the friends and people that you know in your digital lives. So this sort of intersection of your digital and your physical life and the majority and most important things that you're doing in your life being in and through digital platforms is the idea that we focus on. We're a stage agnostic venture investor, but we've been primarily focused in the seed and Series A rounds of these companies, primarily because we're so early still in this space and in this idea that most of the companies being built today are relatively young and newly created.
And you invested in about 96 companies so far?
We've invested now in about 110 companies across our now 3 funds.
Fantastic. Actually, Sam, you just answered my next question in a way, but I think given the topic of today, sometimes we assume that people understand, everybody understands what Web3 is all about and what does the Metaverse means. I know you don't like to put a label on it, but can you, for those who haven't managed to put their heads around it yet, and they're still probably dealing with the crypto and the NFT space, can you give sort of a description, or what does it mean?
Yeah, to me, Web3 is about the financialization of everything. I mean, you have, it's fundamentally a retail phenomenon. I like to think about crypto in 2 broad buckets. One is a kind of institutional asset class type of way of looking at crypto, which is, okay, Bitcoin, you can wrap your head around it, it's this currency no one owns, fine. And then you have this fundamentally retail individual dimension to it, which is, can you take the technology that Bitcoin enabled of, essentially having, bringing fungibility, exchangeability, real world value to previously closed loop virtual currencies, and use things like virtual currencies to bring together communities by financializing the types of entertainment and content experiences that could previously only be consumed but are now investable. And so to me, that's what's exciting about Web3 from a consumer standpoint is, for the longest time, the individual trader, the individual retail person has gotten the short end of the stick. They've always been exposed to adverse selection problems in financial markets. And for the first time, they can now gather together with, based on shared passions and interests, and build global communities around this idea of instantiating in financial form the things that they've always been passionate about. And so, the clearest representation of this to date, in our opinion, has been gaming, where you've had virtual economies exist for 20 years, but previously all in closed loop economic environments where you can buy virtual currencies, but you can't sell them, right? So they're kind of one-way streets where the game designer is the Federal Reserve, and kind of like God all in one in terms of being able to inflate or deflate or do whatever they want to the economy. In this world where your virtual goods, like your swords in game, for example, can be traded outside of just the walled gardens that the game developer has created, and the virtual currency powering that ecosystem is now exchangeable for real world value, suddenly you bring this primitive of open economies and the ability to earn value for your time and engagement. And that's a tremendously powerful primitive that has the potential to really empower the individual.
Sam, anything to add here?
I mean, I think Richard covered a lot of it. I think to me, I guess the only point that I always make when we see that word, and we've talked about this before in terms of metaverse, is just making sure that we're all talking about the same thing and attempting to define to what extent we mean this fully immersive virtual world that most people have come to understand and think about as a result of literature, The Matrix and Snow Crash and these sorts of things, when instead what we really mean is this idea of being able to take your one identity and really exist across your physical and digital life. And I think in that way, it's the connective tissue that really allows you to do that. That to me is what's important when we talk about the metaverse.
I want to touch on some of the tools that are being used within the metaverse to build this whole sort of, as we transition from Web 2 to Web 3. Richard touched on that earlier. You were talking about NFTs, the tokens. We talk about digital identity. Can you share a little bit more about how this is all shaping sort of that transition and unlocking sort of the value of the metaverse? I know you referred to open economy. Can you talk a little bit more about how does that differ from the current world that we have today?
Yeah, I mean, I think there's a number of things, of necessary conditions in order to have this and realize this idea that you're able to kind of move seamlessly between your digital and physical lives, that the things that you do in the various ways that you currently build your digital identity, that you're going to have those things with you as you go out into the physical world, that you're going to have them with you as you go across the various digital experiences that you may have. Like that's if I was going to try to represent it visually, like if you think about the internet today, and technically speaking, we all think of ourselves as having one identity, but we really move vertically sort of down into the different digital experiences that with which we engage, and then we move back up and we authenticate into another digital experience, and we may be using the same name and hopefully not, but probably the same password and these things, but like actually we're technically speaking a different person from the perspective of what's happening to our data, where is the stuff that we own inventoried, how do we access it, all of those things, right, that make us feel like we're one person on our side, but that technologically speaking and legally speaking, we're really occupying all of these different identities. So the first big idea with the metaverse is, how do we start to create one identity, and then how do we make it possible so that instead of sort of going down into an experience and then coming back up and authenticating into the next one, we're able to really move seamlessly between these different digital experiences because we own our identity and we have one set of things that we own, and we're able to leverage the things that we own and the time that we've spent building this identity for ourselves across what is now an increasingly global social graph for ourselves. So when you start thinking about that, open economies matter in the sense that you're going to need to and want to be able to access the stuff that you own and trade it and participate in the sub-economies of these different experiences that are being built for you, or with your help, actually. And that brings up the next point, which is however you want to think about the metaverse, you're talking about a lot of content, right, ultimately. And so I think another big idea and a necessary condition of the metaverse is thinking about how is the content that you're going to be experiencing, how will that be built? Some of it is going to need to be built top down, and some of it is going to need to be, just by the sheer volume of it, need to be built more bottoms up. And so thinking about incentives that are going to enable people to and encourage people to really build out this world way before we get to the full Ready Player One Oasis level. But certainly if you think that we're going in that direction, it's an enormous world and an enormous amount of content that's going to need to be built, and it can't all be built from the top down. I think these are the big ideas. I don't know if, Richard, you want to add anything to it?
Yeah, I mean, I think there's three key things to the types of markets that are suitable for Web3. Like, to me, they always boil down to, do you need digital scarcity as a primitive, is point one. Point two is are there status games you can play where the idea of that digital scarcity and ownership around it is important? And then thirdly, do you have a community where a lot of the value of owning these digital goods, the community myths propel that in some sustainable metagame, right? You kind of need all three of these things for Web3 to make sense. And just because something's digital doesn't make it Web3, right? Because not every context of a digitally marketed, coupon, for example, you don't have all three of these conditions, right? So some of the earliest manifestations of this trend you see in what to an outside observer are going to seem very silly, like profile pic communities like Bored Apes and this sort of thing. I think our view on it is these are just the early representations of how powerful these three things, when taken together, are. And so when you have real communities that are bound together by some shared interest or passion, whether it be it art or photography or gaming, and then you layer these incentives on top of kind of pre-existing passions, I think the potential is so much more explosive than from bottoms up NFT projects. And so in our view, the best is yet to come.
Yeah, I mean, the only thing that I would add to that I was reminded of as Richard was talking about sort of the difference between Web3 and the necessary conditions for Web3. I do think, and we've started to hear people increasingly talk about this recently, this idea of Web 2.5, or the idea of, okay, as we approach, what do the application layers of a lot of the technology that we're talking about, right? Like, there's an enormously important role for Web3 in a lot of what we're talking about, and ultimately what this idea of the metaverse will become. But actually, we're all going to be interacting with, my guess is, first, the idea of sort of smart network digital objects, the idea of digital things that are not necessarily blockchain-powered digital things even, but like a lot of the consumer behavior that we still have to introduce to the majority of the world is just interacting with digital objects in a way that they really haven't to date, or they're just starting to get used to. So Richard mentioned things like digital coupons, and there's a lot of tech that is not Web3 technology, but that allows these objects to create a relationship for brands with their customers. It allows people to take value from the brands with which they interact, and for those brands to maintain this connection to individuals and to their consumers without relying on a lot of the middle, sort of the middling advertising and even marketing and brand building infrastructure. So that you're going to have this opportunity for direct connection between brands and consumers, between IP owners and their community, in a lot of ways that are new and innovative and look different than what's been done so far, but may not be all the way to this fully decentralized, open finance concept of Web3 that is coming, but is still quite a ways to go before we have real mass adoption.
Great. Since we're actually touching on the role of the engagement between community and some brands, I would love to hear from you. What are the industries that you think will be disrupted or are being reshaped by the idea of the metaverse and these communities working together, building, earning, etc.? Can you give us some examples? Especially, since we're in the financial services world here, I would love to hear some examples of, essentially maybe within the DeFi space, even in other mobility. What can you give us some examples?
Yeah, I just gave one that I think is maybe the most immediately disruptive impact of not necessarily Web3, but this idea of Web 2.5 and the power of sort of smart network digital objects and the fact that we can interact with all of them now through a combination of technologies. This is something that brings together digital objects and people's familiarity with them that comes largely from games, but also the devices that we have and the devices that we're going to have soon in the form of AR in particular and VR and so on. So I think the opportunity for the advertising industry, for example, to be substantially disrupted in the coming years because brands are going to be able to build and maintain and nurture a direct relationship with their customers in a way that they've previously been relying on all sorts of third-party intermediaries in the advertising world in particular to do. And I think it's going to become very obvious very soon that that this idea of smart network digital objects are, while they may not be collectible and as strong a community building tool as some of what we're seeing in the early, really viral, really engaged Web3 communities, they're going to be the things that most people start to interact with, and the way you understand and stay connected to brands and businesses is going to be through an opt-in wallet-like relationship where you're going to hold objects that reflect the brand and that allow the brand to engage with you on a 24/7 basis. So I think in some ways that's an incredibly important part of this. And it's going to change how we think about physical retail. It's going to change how we think about experiential entertainment. It's going to allow us to really merge that digital and physical, our digital and physical lives, the way that I was talking about earlier. I think that's going to come through the form of something that looks a lot like a wallet with objects and things that you're given by the brands with which you interact on a daily basis.
I think there's two broad fields that we see most Web3 applications fall under today, art and gaming. And I think within each field, I'll give an example of what's been popular to date and then what in the long run I think is sustainable, because those aren't the same thing. So in the art space, most of the conversation on NFTs or non-fungible tokens has been dominated by these profile pic communities around things like Bored Apes is one of the most well-known examples, where you have these so-called JPEGs trading at 80, 90 Ether floors, close to $200,000, $150 to $200,000, and to an outside observer, it makes no sense. My personal view on the matter is that actually it doesn't make sense. I think there's a lot of hype and speculation driving these profile pic communities, and I think you hear this word community a lot in the NFT space. Unfortunately, I think that's one of those words that's been somewhat abused, and to me, community is about shared passions and interests in the absence of money, which is meant to be this instrument that binds us, binds people who don't trust each other, whereas communities are built on people who trust each other and separate and apart from money, have some shared vision and purpose. So an example of something in the art space that I do think is interesting and something that correlates with a strong personal passion of mine is the generative art space. And the reason I love this space is, unlike a lot of the kind of JPEG Ponzi type of dynamics you see in that space, here you have this field of art, generative art, which is, simplistically you can view it as art produced by an algorithm that leverages this primitive of controlled randomness and digital scarcity to enable a kind of new art medium entirely, right? There have been algos starting from the 60s that kind of outline, these mechanistic processes for artists to kind of combine man and machine in interesting ways. But the whole field has really taken off in the last couple of years because of the introduction of digital scarcity plus the community collection games coming around this space. And so I asked myself the question, what are the types of things that are uniquely enabled by those three things I was describing earlier, the scarcity, the status, and the community? And generative art is an absolutely great example of it, where at the peak of this platform called Art Blocks last year, 20% of the global art market turnover, this platform hit on an annualized basis. So it was absolute madness. But I also like how it democratizes the collection space, right? So much of art has been controlled by traditional gatekeepers and the Sotheby's and Christie's of the world saying, this is art, this like scribble is worth $1 million, right? And for that to be put back in the hands of an individual is to me what Web3 is all about. In the gaming space, much of the conversation's been dominated by this early breakout hit called Axie Infinity that has led to this play-to-earn concept, the idea that you can earn tokens and NFTs for your time and engagement in these games. I think the problem with Axie Infinity, and one of the reasons you've seen the decline in the price of the tokens you earn playing this game, is the game hasn't, to Sam's point about content earlier, the content has not been good enough to attract a stable base of payers who are willing to pay for status in the game and convert and retain them over time, right? And this is the thing the gaming industry has figured out very well now that gaming is a $175 billion a year market. Much of that spend today is happening for microtransactions for status goods. And people only care about the status of owning this or that in games if you've built a great game and compelling content. So I think we get really excited about the potential for great content to be mixed with open economies. We're not one of these funds who believes that everything is going to be a Web3 game. I think there's certain types of genres that lend themselves very well to more open economy dynamics. And it's a very nuanced thing because the game developer loses a certain degree of control by having essentially a freely floating exchange rate that has the potential to disrupt the player experience. And so here's where this nuanced understanding of legal and regulatory, of kind of token economics, and understanding how free-floating trading can impact the player experience, as well as just the ability to design a great game. All of these things are incredibly difficult to do, but I think in the next 2 to 3 years, we will see a breakout hit that generates massive kind of GDP in purely virtual space.
Yes, I think there's, with any of these technology trends, there's revolutionary technology and ideas, and there's evolutionary technologies. And I think in gaming, for example, I think you're going to see Web3 as and when it's applied to real game developers and real games and ideas. You're going to see it substantially enhance and evolve and grow the game space. And I think you're going to see things like advertising and a few other industries, and like we've seen with finance, where you're going to see some really disruptive results as a result as well.
Great, and I think we've seen some transformation as well in the music industry, which is very similar to the art sector as well. I want to touch on the D word, or decentralization. Given that we're sitting here within a regulatory environment, I'd love to hear your views on how do you see the regulatory landscape evolve with this space, given sort of the different types of tokens that are used, again, DeFi, etc. I would love to hear both of your views on this.
I think there's two questions in there. One is, does decentralization matter? And then two is kind of overall views on regulation. I view the evolution of crypto to date, I mean, the whole industry started in 2010 with Bitcoin, obviously. And I think there's a couple of distinct waves of evolution, right? So for Bitcoin, it's incredibly important that Bitcoin be maximally decentralized, because the whole point of Bitcoin is that no one owns it, right? If it's going to be that cockroach currency that survives nuclear wars and this sort of thing, yeah, decentralization is really important. The same with Ethereum, this idea of a global smart contract layer that no one owns. At some point, the value that sits on top of this global computer is going to grow so big just given how big consumer businesses are, that it's really important that not a single actor own the thing, right? I think as you transition to more the application layer as opposed to the protocol layer, decentralization becomes less and less important. And to me, it's more about economic opportunity that's enabled by that kind of core decentralized primitive, right? So as we go beyond things like DeFi and financial protocols for which decentralization is important, more to kind of content experiences where you mix them with market primitives to enable trading around status goods. There, it's much more important for there to be centralization of great content development so that people will actually care enough to trade these things, right? And so I think in some sense, we're going to take a step back from a decentralization standpoint in order to move forward with content experiences that people care about. On the regulatory question, I think a lot of the investor protection rules that have been created in the context of a retail person outlaying some sum of money in order to invest in some venture that someone is pitching them, right? And I think that whole framework, this question of what's a security, are you listening to the efforts of a promoter? A lot of the rules today are geared towards disclosure and transparency and making sure the retail individual knows what they're doing, which is great if you're investing in something, but it's actually a terrible regime if you're a co-participant in a network and kind of evolving with a community, right? Because if you apply the rubric of the individual who's participating in a network has to be protected as if they were, investing in something, you have these laws that basically ask the question, is that a security, right? Is that thing a security? And most token projects are so keen to avoid security status that the only way they can do that is by creating something of so little value that it's not considered a security. In other words, that doesn't actually distribute any economic rewards back to token holders. So we've had this like perverse consequence in the hope of fitting into or fitting outside of the securities law regime, of people creating tokens that provide things like, quote, governance, as opposed to dividends or actual money. And so if we instead took a step back and we realized, okay, the rules that apply to investors may not be the same as the ones that should apply to participants, I think that would be a much more fruitful line of inquiry, because then we could start to redistribute real economic value back to participants. I'll give a concrete example that I see coming up over and over again, which is you have a community of shared passions where the community is essentially creating NFTs or other kind of digital status goods. They're curating those status goods, and they're kind of like the commerce engine that's driving the purchase and sale of these goods, right? So you have a marketplace, and that marketplace is governed by a token. And the best token model would be one where, as the platform grows, as the GMV on the platform grows, the kind of a portion of the transaction fees are redistributed back to token holders. Now, unfortunately, you can't do that, at least under US securities laws, because that's considered a dividend. But to me, that's like a great example. This generalized marketplace example is a great example of what tokens should be used for. And so if instead we focused more on the fact that if you're a collector buying things like NFTs on this platform, then of course you should be rewarded with some of the token as the platform grows because you're an early participant in the network. That would be a much better kind of line of thinking to me that allows token creators to actually deliver real economic value to the tokens they create, and something that's actually not possible today in general because of the regulatory regime.
Great. I want to ask, what can be done to close the gap that exists? Because the space is moving very, very fast. At the same time, you have progressive regulators like ADGM that are trying to sort of keep the conversation with the markets and really consult in terms of the changes they're looking at. But this is probably not the case everywhere else. You sit on many tables where conversations obviously are around the regulations and probably what's happening in the market. How, in your mind, how do you see sort of this gap being closed? What should be done?
I think the first regulator that recognizes that if tokens are just fractional units of network effects, that the old investor protection regime is ill-suited to essentially provide for kind of coverage of this space. I think more of a first principles approach where they say, okay, I'm a video game developer, and let's say I want to create a virtual currency that's tradable. What are the practical things I have to worry about? One is I don't want to violate any securities laws. Two is I don't want to violate any money laundering laws from being the issuer of a virtual currency. So let's just start with those two things and say, if I came to a regime like here and I didn't want to, go to jail for violating securities laws and money laundering laws, how would I do that, right? And getting some degree of regulatory clarity on being able to create a virtual currency for use in my game that I could distribute to players, and just start with a concrete kind of use case where I have that safe harbor of certainty. I think the first kind of regulator who kind of becomes the Delaware of something like play to earn, I think that would be a great precedent to set for the broader industry.
Sam?
I mean, I think that was really well stated. And I do think that games, in terms of the application that has the best chance of really bringing any of this to the masses, it will be through games. It will also, going back to the centralization point quickly, I mean, it's funny because anybody that's ever built and run a large-scale video game knows how many times each player of that game tends to lose his or her password. I mean, it is like the most consistent and persistent problem for game players, right? You're dealing with primarily a lot of kids, and they lose their passwords all the time. And so we were actually talking last week with one of the founders of our studios, and I mean, it was just, for him, it was so obvious and simple when you ask, like, is this going to be fully decentralized or some centralized, initial phase? And it's just impossible to imagine that you're going to make people responsible for that. And if that's the case, then you're going to have, in these games, you're going to have a somewhat centralized platform, and the ability to do what Richard's saying, and to for regulators to work with companies within the context of a centralized or more centralized regime than Bitcoin, for example. Like, you should be able to lay down and adhere to some strict guidelines. We have this problem in the United States that so far we're not seeing over here, for example, and in other places that look poised to really do incredibly well in this new era. In the US, our biggest problem is just nobody is giving any guidance whatsoever. And so it's really hard to operate and know what is and isn't going to be tolerated. It would be fine if we could lay down that, like Richard said, a sort of safe harbor and some rules, and give people a template from which to work. But if you're not going to do that, and you're just going to stay focused on the enforcement side of the problem, instead of actually thinking and laying down the regulations that people can build around, it's a very difficult environment.
I actually want to say one more thing, which I think is important, because Web3 is a double-edged sword, fundamentally. Like, if you go by my definition earlier that it's the financialization of everything, I think there's this very real question of, is the retail consumer mentally and kind of from a financial responsibility standpoint ready to participate in markets where everything becomes a financial instrument? And the consequence, if you really drill into this, is like, retail does not have a great track record of being responsible. And in this world, people will lose money, right? And so I think there's a threshold risk appetite question that you have to get comfortable with as a regulator, of the horror stories of people putting their life savings into things that they shouldn't be, and being okay with that, right? When I first started my career in 2007, the partner at Cleary, the first question he asked me in my interview, we were talking about leveraged foreign exchange markets, a market that retail loses 93% of their money. 93% of retail loses money trading leveraged FX. And he asked me, do you think leveraged retail FX should be banned because it's, objectively so much money is being lost? Or do you believe in a market where you should give the 7% who are making money agency to do so? And that question really stuck with me, right? Like, hopefully crypto is not something where 93% of people lose money, but with economic opportunity comes great responsibility that a lot of people just are not going to cope with very well. And so you have to be willing to deal with the criticism associated with being relatively more forward-thinking from a risk appetite standpoint.
Great, that was really well said. I want to open the floor a little bit for some questions. I'm sure people have a few questions. Just to one important topic I think we don't talk about enough, which is the social aspects or the social impact globally of this fast-moving environment. Yes, Web3, Metaverse is a great place for people to recreate, the way they want to live, they want to work, they want to earn. It really creates great opportunities for people who, like probably Axie Infinity, what it did. I think the Philippines was one of the largest countries to take advantage of that. But the reality is, there are still people that are going to be left behind in this, sort of the bankless, the people who are not going to be joining this whole digital journey. What are your thoughts around this topic? I know we can talk about it much longer, but I'd love to hear your...
Quickly, I think for sure that there will be people that are left behind in that way, but all of the evidence that we have to date that in terms of the impact of technological change and innovation has been fundamentally, to the extent you can measure this, to raise the quality of life, across the board. And for many people who, people are going to be left behind inevitably, and it's something we all have to figure out and deal with. But fewer people are going to be left behind, I really do believe, as a result of the innovations that are happening today. And an enormous part of that is connecting everybody. And we've started, this is way before Web3, obviously, but as we've started to connect the 7.5 billion people on the planet to information and resources and each other in a 24/7 way, with obviously some exceptions, but generally speaking, quality of life across the planet has improved. We're also in a situation now, as we all know, that we have no chance other than through significant continued technological innovation to get ourselves out of the challenges we've created for ourselves environmentally and so on. So I think we are, whether we like it or not, we are enormously reliant today on technology, and I think our best chance is to continue to provide people with the tools to connect with each other, to educate themselves, to monetize their lives in a new way. So I see this as an enormously positive development.
Yeah, I think there's something cool when you think about there's a global arbitrage of wage differentials happening through something like play to earn, right? Because it's the first job I can think of, job viewed uncharitably, where everyone, whether you're in Abu Dhabi or Vietnam or the US, everyone is all working at the same thing and subject to the same economic rules. And so as the content experiences that actually matter start to get created, you're going to have this great leveling of the playing field in terms of capital and labor deployment across the world in a way that really transcends national boundaries, which is really cool to think about. In general, I think so much of what has gotten crypto here today, going back to the social impact question, is this idea of trustlessness, which at its heart is a really cold concept, right? And so I think, now that there has been this class of individuals who's done fairly well out of crypto, I'm seeing an increasing amount of attention being given to kind of charitable causes that can be enabled through crypto, or what I call like warm crypto, which goes back to the point earlier on decentralization. A lot of what's going to take us advance this industry over the next few years is actually going to be the opposite of the stuff that got us here over the last 12 years. And that part is exciting because, like as a concrete example from the generative art space, one of the artists I love did a 24-hour drop, open edition. Everyone could mint one of these pieces with 100% of the proceeds donated to the New York City Food Bank. And in the course of 24 hours, he raised $3.2 million just by selling, these NFTs that cost 0.05 ETH, right? And so the ability to gather together in global collectives and move together with some shared purpose, oftentimes that purpose being a charitable one, I think is a really cool idea that we're only at the very beginning stages of.
Fantastic, great. Thank you so much. Before I hand over the mic to people with questions, 30 seconds each. If you had a crystal ball in 5 years, where we would be with this space?
I think the supranational organizations you're going to see developed around these kind of gaming ecosystems, I think the GDP of the space is going to shock everyone. You just look at how much consumer engagement is driven by, MMOs like World of Warcraft over multiple decades, and you combine that with the power of markets and trading and status seeking. I really think the results are going to be so much more explosive than anyone can imagine. It's not going to be linear stacking of these primitives. It's going to result in exponential effects.
Yeah, and I think you're going to see a lot of that through the integration of some of the big scaled traditional media distribution platforms that we have today, starting to embrace these ideas of community and engaging their hundreds of millions and billions of people through a combination of old and new media.
Fascinating. Thank you so much for your time. We could be talking about this topic, I think, for a while. I'd love to ask you if you have any questions. Anyone?
We answered all of them.
It looks like you did an amazing job.
So I believe in a world that's going to have not one currency or 10 currencies or even 100, but 10,000 currencies. And fundamentally, I think the ability of a community that's bound by some shared interest to create its own currency is very high. Like, I think every game that can sustain an open economy is going to have its own currency. And that doesn't mean that people are going to think in terms of, like when you go buy a coffee, you're not going to translate that into 10,000 currencies. But I do think having a native currency used for virtual goods in some shared social context is an amazing TAM unlock. And why do I think this is? Well, I go back to gaming as the clearest example of this. If you take that franchise like World of Warcraft and you think about, okay, how do I value a franchise like this today? Today, you think in terms of equity value of a franchise, right? So a combination of microtransactions, subscription revenue, ad revenue. But if you actually ask a player how much they love their character or their swords or all of the stuff generated by this game, there's a tremendous amount of consumer surplus there that's not captured purely by monetary forms of representation. And I think what's great about tokens is they have the ability to capture a lot of this dark matter and put it in the form where a value is freely tradable and set by the market. And so I think the ability of a community to self-organize and bootstrap around this shared economic and governance primitive is going to unlock a host of causes, not just in gaming, but more broadly for charitable purposes generally, right? We've seen, just as one example, there's something called Nouns DAO, right? Which is the idea of they release one NFT every day that's auctioned forever. And it's a generative NFT, so there's no limit on the amount of variation that can be produced. So think of it as like a membership club where you have to buy the NFT to get in. And today, Nouns DAO has raised hundreds of millions of dollars with a treasury that they don't really know what to do with it because it's a DAO and they can't figure out, as a decentralized collective what to do. But imagine you combine Nouns DAO with some defined social cause, right? Like criminal justice reform or homelessness or whatever it is. And you had some amount of centralization of, okay, here's what we're going to do with the funds, right? That's a way to tap into the latent desire to contribute more broadly and pair that with some concrete social objective. And like I said, I think we're just at the beginning stages of seeing things like that in ways that are going to truly make people feel great about this space. Second question I forgot. I'll let Sam answer.
Well, I was just going to say though, so I think that's, I think it's such an important part of how we can start to imagine sort of Web3 for good and is this wealth transfer concept and donations like Richard's talked about and the idea of mobilizing people around an idea. What we don't have time to talk about now, but what I think we're going to come back around to over the next few years, and actually one of the reasons I'm so glad that that we're entering a period, I think, where a lot of the hype and speculation around these cryptocurrencies is blowing off, and we're going to be back to hopefully really reminding ourselves that so much of what's interesting about this is not at the currency layer, but actually is at the technology layer. And so, I worked for years with the UN in their sort of blockchain for good initiatives, and especially in 2015 and 16 and 17, nobody was talking about, oh, there's all these rich crypto people and they're going to donate money now to causes. They were talking about like the important things that matter when you're trying to help people in a place, like supply chain, and making sure that the food isn't contaminated, making sure that people, like one of the biggest problems with giving aid in the developing world is just making sure that the money actually reaches the people to whom it's intended, right? So you have a lot of things there. Identity matters so much in this context. One of the most important initiatives, the work they've done in refugee camps, and these are like back to basic ideas of what blockchain technology can do in terms of allowing people, you mentioned sort of banking the unbanked, but allowing things to be sent to people directly and out of the hands of people that are spending a lot of time trying to get in the middle of it. And aid, our biggest problem is just making sure it goes to where it's intended to be sent. So I think a lot of that is separate and apart from will people be motivated to give money. There's lots of people that are already motivated and have been motivated way before they got rich from crypto. But the percentage of the money they're trying to give or the food that they're trying to send and so on, that's where this technology can really, really matter. And I hope that what happens over the next few years is we get back to thinking about that, because it's as important as anything else we're talking about.
The example is farmers, for example, in Africa, sort of using the blockchain. I think I came across a couple of apps that do that. They can actually trace everything from coffee or vegetables all the way from the farmer till the retailer, which again helps with when it comes to financial inclusion and sort of making sure that human rights issues are also solved.
Yeah, I mean, the amount of fraud around food rations, for example, the amount of fraud around refugee stipends, the amount, like all of those things, hopefully if we're getting to a structure where there really is a direct relationship and people are able to authenticate their identity and receive directly the intended, I mean, it's that. And the same idea goes across food supply chains. Because you have the same interest. And this is going to be an enormous problem, by the way. There's only more incentive than ever to get in the way of a shipment of clean water, of a shipment of clean food, and so on.
Absolutely. Okay. Any more questions?
I have one. I really enjoyed your insights. Thanks for sharing. I just wanted to ask you your views on Meta, so the company that we use, Facebook. You've obviously how is that going to go for them? In the next 5 years, what is the company is that going to look like? What are the product lines that are going to drive that company? What's it all going to end up with?
I think there's a lot of disagreement right now amongst even the analysts that cover Facebook, and certainly the people, the novices out there that are just opining about what Mark Zuckerberg is really up to. I've been around the VR space, for example, for long enough to know how passionate, like genuinely obsessively passionate he is about the idea of the metaverse. When he talks about it, he's really thinking about the most realized version that we can have in mind. So I think for sure it's been convenient over the last couple of years for him to talk about the evolution of Facebook from a social sort of Web 2.0 social platform to this idea of an immersive digital place and distract people. And these are the critics really believe, like, great, let's distract people from the challenges in the advertising business and the challenges with consumer protection and privacy rights and so on, and let's just talk about this shiny new toy. But I really believe he's obsessed with the vision and the idea of bringing this out in its most sort of deeply immersive fashion. I think that he has an enormous brand problem. And I think that there's all kinds of reasons why people may not want their metaverse experience ultimately to be dominated by Facebook. And at the same time, he has such an enormous, when you start with billions of people and you want to talk about a space that no application yet has even 10 million people, even millions of people in it, right? And so he has an enormous advantage in terms of being able to convert a very, very, very big installed user base. As much as everybody complains, he can restrict your access to the VR store through Oculus to people that have a Facebook account, and right down the line. And so he's in a position to create a very powerful walled garden and to have an experience that scales, I would guess, sooner and deeper than any of the startups out there when you control the hardware the way that he does and you control the software platform. So there's going to be a metaverse type experience that a lot of people are going to be in, and Facebook is losing users, but it has a long way to fall before it would not be the biggest platform available to people. And so most of us are going to understand the metaverse and I would guess engage with VR and engage with immersive social in that way through Facebook's platform first.
I mean, the only thing I'd add is I kind of think Facebook already, or Meta already owns the metaverse through Instagram. I mean, just generationally, if you ever go out to dinner with 20-year-olds these days, it's like at least 50% of their time is geared towards getting the right Instagram story, right? In some sense, they're already more digital or online than they are physically present, right? And so I think in this debate, there's too much talk actually given to the 3D immersive spatial version of the metaverse and not enough about this world where our identity and our status is primarily online. And we all know how incredibly nuanced social interactions are through social networks, right? Like the difference between posting an Instagram story versus doing a real post, for example, right? And a lot of this nuance gets lost when you talk about this grand Ready Player One thing that may or may not come, right? So I think if you take the definition of Web3 I offered earlier, right, where it's about status games, it's around digital scarcity, it's around communities, there's a lot that they can do in leveraging their existing social networks to take more incremental steps to enabling kind of trading of status goods and things around. In fact, Instagram is doing this, right? It's going to be possible to trade NFTs through Instagram in the coming months, right? Like I think those experiments in some sense are going to be much more interesting to watch than the kind of theoretical version of the debate that a lot of people like to have.
Great. With that, I would like to thank you, Richard and Sam, for today. It's been absolutely fascinating having this conversation with you, and I hope we can continue the engagement as well. We welcome everyone to join us at Koya. We're going to be going there for some drinks and canapes and a networking session if you'd like to join Richard, Sam, and the team. from Galaxy. Thank you.
Thanks, everyone. Appreciate it.